So, good evening, everybody. I'm Radhika, your host moderator for today. I head marketing at InCred Group, and InCred Equiscope is our new property that we have launched along with our InCred Equities research desk. And we are very excited to kind of bring you our very, very expert and reputed and well-rated research analysts, to come speak to you about the specific sectors that they cover. So, as you know, for those of you who have, been introduced to InCred very recently, uh, InCred as a group has three verticals. One being InCred Finance, which is our lending vertical. The second vertical is InCred Capital, under which we have wealth management, asset management, equities research comes into play there, and broking as well. And we also have investment banking, equity capital markets, and all of it. And the third vertical is InCred Money, where we have our retail wealth tech investment distribution business as well. So InCred Equities, formerly under InCred Capital, it has been one of the very prominent names now and growing very fast, gaining a lot of popularity with institutional clients who are largely the clients who work with the research desk. And today, as you all know, we are here to cover one of the most hottest topics I would like to think in the markets today, which is around the food delivery business, right? And not just food, I think overall the e-commerce and the tech business around it. So we are here today to look at, specifically also on insights on Zomato and Swiggy and what the future of this high growth industry looks like. I believe, and I think Abhishek can correct me, but I think the Zomato CEO himself has said somewhere in the end of last year that a 30% growth year on year is the kind of growth that they are seeing themselves. And in fact, to throw some numbers that I can see, the India's online food delivery market is projected to grow from US dollars 43 billion in 2024 to US dollar 265 billion by 233, right? So that's staggering growth. And, it's always nice to bring one of our research analysts to speak on this because they are absolutely factual, research based, neutral in, all their views. So without further ado, I'll introduce Abhishek to all of you. Abhishek Shandarkar is our research analyst who covers the overall technology and IT services sector for our research desk. He's a seasoned IT service analyst with over 2 decades of experience having navigated diverse market cycles. He's recognized for his expertise and has, in fact, been ranked as India's number three overall analyst in information technology, a top stock picker at the 2019 Refinitiv Star Mine Analyst Awards. And in fact, he has been consistently among the top 10 to 15 rated, top rated sectoral analysts by Asia Money as well. And prior to joining InCred, Abhishek has held key roles at Elara Securities, Equities, and ICICI Securities, where he's provided in-depth insights and strategic analysis on the IT sector. So welcome, Abhishek. I hope that does justice to your, experience and expertise.
Um, Thank you. Thank you, Radhika, for hosting me today, and good evening, everyone.
So over to you, Abhishek, to kind of take us through what you believe are the strengths, weaknesses, outlook in the sector, and what clients should expect going forward.
Sure. So maybe we will split the time into three or four contextual areas in terms of how we see the sector, what are the opportunities, and the first and the foremost is what could be the blue sky scenario, because in any form of investing, where are we in the cycle is always a pertinent question for investors. If you are late in the cycle, then stock pickings becomes very critical. If you are right in the middle or early part of the cycle, then you know that there is a big industry tailwind, that is kind of helping.
Sorry, Abhishek, can you just be a little louder, I think, if you can? You'll have to maybe just use a little more.
Is this better, Radhika?
Yes, a little bit.
Okay. So what I was saying is that catching the industry cycle is also very very important in the scheme of things. So for example, to illustrate an investor in IT services companies in the year 2000, imagine the amount of wealth that has been generated, and this was obviously we know Infosys, TCS, the larger names that were then, listed in India. But there were, few other names like Mastech. There are n number of stories who have gone up from, maybe sub 10, 1,000 crore market caps to in excess of 20, 30,000 market caps. Yes, there are, exponential winners, but the industry trend is very, very critical. And that is one of the key questions that we always hear when we also interact with, current and potential investors, that where are we in the cycle, and what is the potential blue sky scenario. So obviously you can uh, help understand this topic by a couple of ways. One, you can compare the market growth rates that have happened in other developed geographies, and that is one way to look at it. So look at US, looking at China or any other market. The other way to look at it is try and compare and contrast the growth in the transacting users in elsewhere. So one of the things that we have captured, or probably we were fortunate enough to capture, that was to look at the Demat holders in India. Now, why Demat holders is because, these are unique customers. You can have basically a Demat account. So the assumption is that your ability to have a Demat account is also a reflection of your financial status. That's one. Second, you are also judicious enough to take decisions. So what we looked at is that, how has this number grown? Because this could be a potential market opportunity for, both the food tech as well as the quick commerce business, because ultimately revenue is a function of, monthly transacting users. Now, if you see, the Demat account holders in India have grown at a CAGR of 33%, during FY 1924. And one of the pushbacks that people generally have is that maybe 20, 30, 40 million is the max from a monthly transacting users perspective. Last year, that number would have been somewhere in the region of 10 million or 15 million. We are already past that. So what we thought is have a look at this number. So if I look at it, we have 178 million Demat account holders. Obviously, knowing the basically the age composition, um, and the financial information would be very interesting. But obviously, that some of that data is restricted. But what we kind of definitely see is that the distribution of Demat accounts, across the states in India. So largely, the Demat account concentration is driven in the west, in the south, also in the north. So, which is also a reflection of, the per capita income of these states, and majority of the states are now doing extremely, extremely well. So one of the data points is that we still have a long runway in terms of the growth in the monthly transacting users. That's point number one. Point number two is obviously, there is a perception that as the volume starts growing up rapidly, the unit charges will fall off, and that would mean that the growth rate could be lower. Now, obviously, historically, we all know that economics works the same way. But what we have seen is, especially even in Demat, the unit charges have come off by almost, 20, 30 rupees from 90 rupees in the past. the fee revenue that NSDL and CSDL have garnered has grown almost at 22% CAGR from 2020 19 to 24, and that is higher than what it did in the previous 6 years. So it seems like the volume growth can definitely help out or outpace the um, growth, or maybe the potential moderation in the price. But again, we are at a very, very nascent stage, and that's why I'm categorically using the word potential, because we are still very much early into the cycle. The second way that I highlighted how do we look at it is basically look at the Chinese and the US food delivery market. Now, if I look at the US food delivery market and the Chinese market, the broader composition of those markets is similar to India, or let's say India is probably similar to them. So largely, three players, maybe two dominant ones, and then the competition itself in the third player. Now, despite a relative size of almost probably closer to $90 billion. The food tech market in US is likely to grow at 5% plus CAGR. Now we are talking on a very large size. Interestingly, if you look at the data point, the amount that US will add in terms of the incremental dollar addition, that itself is 2x the size of the Indian market. So looking at growth numbers is important, but also looking at the incremental dollar addition that is likely to play out is also very interesting data point that we always kind of miss out on. The US market delivery transactions have grown exponentially 80-85% pre-COVID. That still is dominated by DoorDash with roughly 60 to 65% market share. Now, China is another, size and scale player. I mean, which we all know about. So, they had a remarkable transformation. Obviously, COVID was one of the key drivers, but the user base in China has expanded from roughly 114, 15 million in calendar year 15 to almost 500 million plus in calendar 23. Now, there are some other data points which are important. We will come to that, but largely, if I see to it, the demographics is, in the age of, 18 to 40 years old, and it has seen an exponential growth. Now, in China, you have Meituan, which is basically, 70% share. It generates, primarily food delivery. Then there is Elimi, which is Alibaba Group, which also has, the kind of market model that they run. Now, if I, just run you through some of these data points, I mean, the third way of looking at this market is to, also look at the subscriber data, because obviously, people always look at, a smartphone user as one of the potential candidates for eventually ordering food. Historically, it has played across markets. So that again in India, the size and the scale is humongous. Obviously, there we'll have to slice and dice that data, because not all 500, 600 million phone users will become. But still, even if we take out, make some assumptions in terms of what could be the potential market size, we still have a very long runway. So maybe summary point number one is that the food tech, or let's say both the food tech and the quick commerce market, at least from our perspective, there is a good runway, growth runway in front of us from a monthly transacting users perspective. Uh, to move to the next, data points in terms of, kind of just highlighting how the market is. If you dissect the delivery market, there is food delivery, there is grocery delivery. Within, both of them put together, the global online food and grocery delivery market could be roughly around 1.8 trillion plus, with, grocery being commanding almost 70% market share and also growing a bit faster than the food delivery market. Within the food delivery market, there are two segments. One is basically the platform delivery. The other is basically the direct restaurant delivery. Now, platform delivery is almost 60-65% of the food delivery market, and the rest is restaurant delivery. Why is because obviously from a customer standpoint, I get multitude of choices rather than having calling one single restaurant. Looking at the grocery market, within grocery again there are two sub segments: quick commerce and retail delivery. Obviously, retail delivery is the largest because, as we know, the um, quick commerce is just picking up right now. But still, again, total grocery delivery GMV market could be somewhere around 1.3 trillion. Within that, roughly 300 is the quick commerce and $1 trillion from the retail delivery. Now, if we dissect, the global online food delivery market in terms of the GMV split and look at it geographically, India is probably just about 10-12% as a percentage of the overall GMV. In terms of grocery, again, we are just 10-11%. Obviously, India, every state is almost, acts as a country for your given the size, scales, and the diversity we have. Now, just to give you some examples, given that we are talking of global markets, DoorDash, one of the key, participant of in the US market, saw its revenue, moving from almost $3 billion in CY18 to almost $65 billion by CY23. Now, obviously, COVID was one of the biggest drivers. So maybe if we can also say an inflection point in terms of the adoption rate. The take rates that company, especially DoorDash, makes is in the range of 13%. Similarly, and, again, if you look at Me2On did almost, they were running like what, maybe 600, 700 million, transactions on the platform. Uh, Today, they have, transactions in 15 billion, 20 billion dollar range, so exponential number with a 14% take rate, they still operate at that volume. So, from a perspective, that's the second, maybe a summary, quick summary is that, globally, people have seen, exponential growth in the adoption rates. And we are also beneficiary of the same pattern that has happened in the past with other developed geographies. Now coming to the parallels maybe for the Indian industry, Radhika already mentioned that the size, from maybe sub 5 billion, 8 billion kind of a number, we can go to a staggering 21 billion in only in the food tech market. If we add the retail component, especially the grocery delivery, these numbers could be humongous, and from a scale perspective. Now, there are some other nuances which I was highlighting, that why Chinese and Indians differ is because of the home cooked food, right? I mean, even today there is one data point shared on Twitter, by a very good CEO from one of the trading platforms that we all know, and he's put good statistics in terms of like maybe Singaporeans, Chinese, they have all of their meals outside. I mean, in India, that's very difficult to fathom that we'll have all our meals outside. So the ordering frequency in India is still 50% of China, and maybe 50% or more than US. But then obviously there is a difference in the culture, difference in our mindsets, but ultimately, eventually, as more and more people, kind of join the metros, as more and more people, as more families start working together, I think, this take rate has a scope to go up. So from, maybe ordering frequencies of only 3 times, maybe we can go to 5 times. So that is one second leg of, growth apart from the monthly transacting users, that data point that I shared. So MTUs generally in India are 3 to 5 million. They were 3 to 5 million in India for around 2018. At that point in time, and those numbers can go to almost 35, 40 million over time over the next couple of years. So that's the other trend. The third aspect is obviously the average order value, which is another big driver in the scheme of things. Now average order value for food delivery is was around 290, 300 rupees a couple of years ago. It's already in excess of 400, 450 right now, but it has still headroom for growth, because obviously, I think one of the interesting title that we gave is both these companies are solving for convenience. And that appears very simple, but intuitively, if you see, what we were, let's say, buying physically, I think most of us buy today on Amazon. I mean, we have forgotten at, the first thing that we do is check the price on Amazon for any product now from a household perspective. So I think these guys are solving your convenience, and that also brings me to the topic about quick commerce, because Amazon is now recognizing that Indian quick commerce model is something that the world will adopt. I mean, they have said this their earnings transcript that this is something very unique. So they were planning to do it with the use of drones. Obviously, India is a very large market, and we can try out this quick commerce model, or we are almost successful. So moving to the other aspect of what can change the average order value for both these companies is the quick commerce, because today, um, 15-minute delivery was a trial, maybe 2 years ago. Today, most of us, I mean, anything that we go on social media and, any search that you can try, you will see n number of instances where people have traveled to a location for a business or for a personal travel. They probably forgot a lot of things, or maybe some important aspects. They just got it in their hotel room in 15 minutes. So I think this convenience is something very different. I mean, today we may not be able to, kind of acknowledge what we are getting in 15 minutes. But, imagine, in the Swiggy IPO meet, they said one of the big, in one of their quarters, the biggest orders that they were seeing was for, bed sheets. And that was not, I mean, they themselves have a lot of analytics that they keep on running on, because you never know what size products you have to keep over a period of time. So assortment is where we still are graduating. People are just trying out the initial, people started with small packet products. The assortments are now going up. So right from today, what you get is a 50,000 rupee PlayStation 5 in 15 minutes. I mean, that's like something, wow. I mean, getting a PlayStation or an Xbox, half of us would probably were thinking to get it imported from the US market because it's cheap there. So we'll wait for, 6 months to get it from somebody to fly from there. Today, in 15 minutes, you're getting a PlayStation 5 at your home. So the retail market in India, especially the quick commerce market, is going to see exponential growth. The categories there are, grocery, fashion, electronics, beauty care. Today, grocery is something that is kind of improving because obviously people have now understood, the kirana stores also have understood that, rather than running a small shop, I might invest in a dark store because my volumes go up dramatically. So what Swiggy and Zomato do to attract people on the dark store is, generally the commitment levels are 15% plus ROCs. In metros, it could extend up to 18% ROCs, and that's like, phenomenal return for people who know this business or do the business hands-on. So from a top-down approach, the markets from anywhere between, $700 billion is going to double. India market itself can become a 1.2 trillion market. Within that, the share of organized retail is very small. Today, the organized retail itself can double. A sub-segment of that is quick commerce. Quick commerce is 6% of the CY23 market. It itself can probably go to 11-13%. So, one of the data points that we picked up during our, work was that in US, 5,000 and 7,000 is roughly the size, per supermarket, the population size. In India, that number is a staggering 40-50,000. So, we have probably 10x lesser supermarkets compared to what is required if we go to the same market like US. So the online penetration in some of the markets is very, very low. Grocery in retail, it's 10%, $500 billion market. Organized is maybe sub 10%. Online penetration is maybe 1-2%. So that market itself is there. Electronics, as I said, today, we can see an iPhone getting delivered in 15 minutes. Obviously, there is a price, competitive landscape that we obviously, as Indians, we are very, very conscious about, the price, and which is a very good thing. And so, obviously, there is other dynamics playing at, but, imagine you are getting the maybe at least an average 60,000 rupee plus iPhone in 15 minutes. So what is this going to do is that the average order value in quick commerce can exponentially grow up. So maybe as we start ordering more and more higher order value, and that will be a function of the assortments, and that will be a function of the dark stores. So for example, Zomato was planning 1,000 dark stores by December 26. They are planning 1,000 dark stores by 25. So they have rolled forward their growth assumptions, by a year. Swiggy similarly had plans for some, X million square feet, space under their, dark store. They have taken that, they have rolled forward their growth assumptions by, almost 8 to 9 months. So there is a lot of traction in the quick commerce market. As I said, the summary of this is that the average order value today is not reflective of the assortment and the potential assortment that is going to get, delivered by the quick commerce partners. The second, we always have, I always joke with my counterparts that, Flipkart had has $1 billion sales in before Diwali. Maybe, in few years, you will have $1 billion sales coming from maybe Zomato, Swiggy, obviously under their, quick commerce platforms, but there could be multiple $1 billion sales. I mean, one example, again, anecdotal data point is that, many of us know this, Vijay Sales, right? I mean, Vijay Sales has an Apple's Day. Apple Day, they had an Apple Day in January where they discount all the Apple models. So I guess, saying that today probably the summary is that the market is small. Um, each of the players are evolving. Each of the players are trying out new models. Maybe a physical store like Vijay Sales, trying an Apple Day to attract the potential loss of customers that can happen to him is a sign that the market is maturing. Yes, there will be discountings, there will be other factors which will get, but then when we are looking at the scale and the dollar addition of $100 billion, this all plays in that in that addition. One of the interesting points that we have also highlighted in our note is the fact that ad monetization is a very, very strong potential revenue stream for all these platforms. If you look at the Amazon story, today, as we know, they have an assortment, anything from books to the media consumption, the OTT platforms that we have. But obviously, there is a bigger revenue that comes in the ad monetization. And, with the MTUs, potential MTUs that, these platform companies are going to gather or garner over the next few years, one of the biggest driver for them will be, ad monetization. And it would also be very, very cost efficient for media agencies or for, potential advertisers because, you would be able to run a very, very targeted advertisement. And the one of the biggest concerns in the advertisement from a tech perspective is knowing the ROI of the investments on the ad platform. So, one of the key tech investments that many of the media agencies globally continue to do is to figure out the ROIs of their investments. So I think what these platforms give you is, a dashboard where you will be able to, direct an ad or a placement of an ad for a specific niche segmental customer whose requirements may be potentially in the next 3 to 6 months are for that product. So just to give you one simple example, Google India makes roughly 2,700 crores of net ad revenue. Apple India, which is another listed ad tech platform company, makes 1,800 crores of revenue. So and this would be directly flowing for to the take rates because this is an EBITDA contributor. So I think that's one interesting data point that we have looked at and we think is there. The other two aspects, obviously, when you are running these two platforms, are obviously your B2B supplies because what happens is the supply market is very large. Many of the so what it becomes like you become the central platform for connecting your supplies and restaurant partners on the same platform. You can order when required. So basically, that helps on the supply side. The restaurant platform companies would also be aware that when and where they will get the order. So that value chain linkage becomes very very critical, and that is why both Swiggy and Zomato are investing substantially on creating this B2B food supply market. The numbers again are very, very staggering. $100 billion+ market that the Indian food services will drive. Again, the raw materials account for 20-30% of a restaurant revenue. That itself would mean that 30-35 billion dollars market for hyper pure platforms that both Swiggy and Zomato have. So Swiggy's platform and Zomato's platform have. The other, so basically what happens is dark stores become, the nerve center for doing this the platform for connecting the B2B supplies. Maybe the last industry aspect that I will talk of, and also highlight is that the differentiating factors. Now, um, you know, one maybe to summarize first, we think that the market is huge. So the TAM today appears significant. Uh, both these companies, I think, food delivery on the food delivery platform side, both companies have got the house in the order. So the business model, and we especially like to call it the contribution margin, right? So I think the contribution unit economics is sorted for both of them. Infrequent or frequently there could be a third competition that can come up. Obviously, um, uh, uh, and that can create some of maybe 1 or 2 quarters of movement from a unit economics perspective. But then I think largely both these companies have got the unit economics in place. The second factor uh, you know, is from a perspective of the quick commerce. Now, obviously, quick commerce will see, a bit of competition. All of us are, going through the same news flow. We use the same app. So, anecdotally, you would be aware in terms of, the discounts that are being offered or promotional events that are being offered by a competitor who is potentially looking for a fundraise or an IPO, so on and so forth. Amazon has started doing trial runs, for quick commerce in Bangalore. I am sure many of us are receiving messages from Flipkart for a 15-minute delivery. So largely at the moment, it looks like a five-player market. But again, maybe a six-player market if I add, the largest retailer in India. I think what is interesting to note is that, it seems like we are adding incrementally, not maybe $1 or $2 billion. We are adding multiples of billions of dollars. So yes, there could be winners and losers of this, and that brings me to the starting point as to why we always talk about where we are in the cycle. Because if the wave is right, yes, the wave will push all the players. Eventually, there will be leaders depending upon the business strategy, the leadership style, the working culture that all these organizations have, their agility to think, their agility to launch product, the prima facie, the main important thing is the agility to close products, because at many point in time, you will see that ideas take time to fructify. So I guess if I kind of quickly summarize the differentiations between the two, I think Zomato is a leader. They have a control over unit economics. So that's one argument. Once they achieve Blinkit, EBITDA breakeven, I think that will be a very, very pivotal milestone for them. I think with the competitive intensity over the next 6, 8 months, maybe that can get pushed, but yes, that is there. The other important aspect is now they are, trying to merge culinary delights with entertainment, and I mean, the GOVs that we are talking in those, in that uh, business are very, very different. I mean, as an outsider, we think that book my show hai. I mean, what's the big deal about it? But if you kind of are able to create a ecosystem for any customer to enter, and right from booking his tickets or booking events booking is one of very large market in India. So right from there to exiting with a meal in your hand, I think it creates a lot of value for you. So that's Zomato. On Swiggy, I think if we look at Swiggy, what they have been able to do very, very differently is the Bolt. I mean, a 10-minute food delivery option. I mean, in the recent earnings call, even Zomato said that now they are also doing. So what Swiggy did is to take it, from uh, almost nothing to 450 cities. That Bolt app is driving a lot of traction for Swiggy. So that is something they are doing unique. Zomato is now also starting. I mean, the names can get different, but basically what they are trying to address is the hunger quotient of people like us, where there are no nearby restaurants, or they don't have cafeterias or canteens. And there is a large market for that, and they will be provided with any snack item in a 10-minute or a 15-minute time. The other aspect of Swiggy is, was basically the improvement in the food delivery. I think the recent quarter was good. They demonstrated what they highlighted in in the IPO roadshows, or even in the meetings that they had during the IPO. So they have been able to demonstrate what they, getting the food delivery house in order, get the unit economics right. The third thing again is, one of the interesting things about Swiggy is the single app. I mean, intuitively, they have one single master app, if I can say. I mean, we obviously keep on reading in media articles that Tata is planning a super app. There are n number of other B2C players who are trying to build a super app. Swiggy has almost a super app. So what happens is, when you have a single app, your ability to cross sell or monetize a customer is little better. And intuitively, the amount of time spent that users spend on an app goes up, because then you obviously, once you order food, maybe you could also check, or there could be notifications for the current running offers in your area, or for the products that you may have searched across other various platforms. So intuitively, you can increase the amount of time that a customer is able to spend on the platform, and that itself, eventually, historically, the data is suggesting that eventually leads to a transaction on the platform. So that's Swiggy. I think our view, to summarize, is that quick commerce unit economics getting sorted is a very good thing. That will generate cash, and the cash generation, the magnitude of incremental growth will be very high. There could be 1 or 2 quarters of hyper competition, but I think largely, even the managements are acknowledging that this is something that they will use as a cash cow. um, uh, that's one. Second, on the quick commerce side, the scale and the size that could potentially, India could witness is very humongous. It could probably absorb at least couple of competitors apart from the current players. Um, what helps you gain market share is basically, if you have, if your food delivery business is throwing cash, that gives you the necessary firepower to, ensure the customer retention rates are very high. The last bit is, the entire value chain on the B2B side. So right from having dark store on one end to, getting the restaurant partner all the supplies in time, I think ensures that, you make, um, you keep the partnership ecosystem engaged to a level where, uh, you know, uh, there we have read all of this in the past, that there have been skirmishes, instances where people thought that maybe customer restaurant partners would like to start their own platforms, so on and so forth. But I think when you get into that value chain, ultimately people look at ROI, and if they see an ROI, I think they're more than happy to be part of that entire value chain. So I think that B2B value chain is something which will hold this entire, or will be the foundation for driving, the entire platform business for this good commerce play. I think that's all. Maybe a long monologue. I hope, Radhika, you found that and your,
No,
view
I
was
think,
useful.
yeah, I think we will possibly we'll put this up, as a recording because I think there are a lot of important data points that you shared there, which we would love to go through once again. But I think, it's amazing to see the kind of opportunity out there that you've painted for India, comparing it with US, China, and I think that was completely another dimension where you mentioned about ad revenue that can be generated, ad monetization, and as well as the B2B food delivery. I mean, those are all absolutely untapped areas as well. So I'll open it up for questions from our participants now. You can use the Q&A box at the bottom. And there is one or two questions which have already popped up, which I'll ask you, Abhishek. Um, One question is that I think this is something most of our clients would like to know is how do we look at the valuation, right? As an outside investor, how do we value such businesses? Looking just at PE is not right. So, what should we consider to understand the valuation just from a knowledge point of view? How do you look at it?
Sure. So, the way we have looked at this business is there are two ways. One is your DCF, which is the discounted cash flows. The other way, which historically investors have done it in India also, is you're looking at the comparable peer, maybe within the same space or outside. And one of the analogy that we think is more suitable to this kind of is people were having this same challenge when how to value Naukri, info edge basically. Valuing InfoEdge was the biggest challenge that we ourselves as analysts and investors were facing maybe 10, 15 years ago. And the way we have looked at it is also look at in Naukri's stage, how they have moved. Naukri was a similar business with upwards of 50% market share in India. Largely, there were other players, but they were not as dominant. In India, I mean, global players from the same space were there. We all know the same names. The other thing is, Naukri's EBITDA margins were also, similar to what, they were basically a dominant player from a market share and EBITDA margin perspective. So what we have tried doing is, try and compare the stages of where these companies are relative to Naukri and see what can be the potential outcomes. That's one way. The second, obviously, as we are also, someone who, who learn as we go along, and that never stops. So we also try and reading. There are now enough number of, books available in the market which talk of, how do you value some of the platform companies. There is a book by Google. So I think, maybe that's the other way to keep on, reading as much as possible to eventually look at how Amazon. I mean, one of the interesting always this conversation comes in the platform play is that look at the history of Amazon. People never were able to get
Right,
their
yeah.
arms around the business and the
Yeah.
valuation. But I mean, those who were probably knowing the CEO and the founder took basically long tenured bets versus people who thought were kind of doing the valuations as we do, from a financial perspective. So I think there are various matrices. Not all of them can be, uh, explained at one go, but yes, these are the ways that people can basically have, their reference points.
One more question, and I think we'll close after this. We are running out of time. Given the progress in AI capability, entry barriers, do you think they are dropping? And what is the business moat of Zomato? If the AI cost drops, many new people will enter. I've just realized that we could actually have one more session and still not finish talking because there's so much to explore. Never realized it until now. There is one question saying, could you share a summary of the highlights? But I think, Abhishek gave a very good summary sometime back. And we will anyway be recording this session and we'll share the snippets with you. So, Abhishek, thank you so much for doing this session. And I'm sure it has been insightful for all the people who attended it. Thank you, everyone, for joining. Thanks for wishing.
Thanks, Radhika, for hosting me. Thanks.
Thank you. Bye.
Bye.